Hello everyone, in this video we are going to discuss all the concepts and questions of IND AS 20, accounting for government grants and disclosure of government assistance. Okay, standard is basically divided into the 7 areas. Starting with meaning of government grant. What is a government grant? I'm breaking that meaning into 6 parts. So first one, government grant is a government assistance. Okay. By transfer of resources. Of course, government is assisting you, financially helping you, right? By transfer of resources. It can be monetary or non-monetary, but there will be transfer of resources to one entity or a range of entities. What do you mean by that? To one entity or a range of entities? It can be to one particular entity or maybe to an industry or maybe to a range of entities where the turnover is equal to or less than 20 crores or net worth is equal to or less than 10 crores. There could be some criteria. And very important, upon satisfaction of some conditions. It can be related to past, present or future, but generally grants are conditional grants. Okay. Which can be monetarily valued. Sometimes government gives you some technical assistance or advices which cannot be measured in monetary terms, then it won't be recognized as a government grant and not in normal course of business. What does that mean? Say, for example, if you're a contractor and government is giving you a contract to construct a flyover, where government will definitely give you consideration, will that be considered as government grant? No. So 6 points. Government grant is a government assistance by transfer of resources by government to one entity or a range of entities upon satisfaction of past, present or future conditions which can be monetarily measured and not in normal course of business. Okay, done with the meaning. Now, what is the next one? Recognition of government grant. When do you recognize a grant received or grant receivable in the books? Say, for example, I applied for a grant and it is certain that I'll receive the grant, but it takes 2 months' time. So I applied for the grant and I'm sure that I'll be receiving the grant, but there are some conditions attached to the grant. So when should I recognize the grant? After satisfying the conditions or after when I receive the grant? When should I recognize? So you should write, if you get a situation as per IND AS 20. A grant will be recognized in the books when there is a reasonable assurance that the conditions will be satisfied. First point, when there is a reasonable assurance that the conditions will be satisfied, I'm sure that I'll satisfy the conditions and grant will be received. If 2 points, 2 conditions are satisfied, grant can be recognized in the books. It is not compulsory that the grant should be received. I can also pass the entry grant receivable to grant. Okay, fine, understood. Now the third area, accounting of government grant, which is the crux of the standard. Accounting of government grant. Okay. For the purpose of accounting, grant is divided into two, broadly divided into two, monetary and non-monetary. What is the accounting of this monetary grant? Monetary grant, if you have received a monetary grant means, say for example, if you received a grant of 20 lakhs, you received 20 lakhs cash, 20 lakhs cash or check you received, then how you should account? Grant received 20 lakhs. Now I'm reading what is given in the standard. If you received a grant, if it is directly related to the acquisition or construction of an asset, if it is directly related to acquisition or construction of an asset, then asset is divided into two, depreciable and non-depreciable. Yeah, asset can be a building or a plant and machinery, or it can be a land which is non-depreciable asset. So first let's take if the grant is received for or let's take whether depreciable or non-depreciable. The accounting is first case the accounting is same. If it is depreciable or non-depreciable, you have two options. Option number one, deduct it from the cost of asset. Say for example, the cost of asset is 100 lakhs and I got a grant of 20 lakhs. When I acquired the asset, I passed the entry asset to bank. Okay. Then the grant is received, I can pass the entry bank to asset. Oh, really? Yes, adjust it from the value of asset. Or you could have passed the entry, listen the journal entry carefully, bank to grant, grant to asset. Effectively, it is bank to asset. Yes. So, you can deduct it from the value of asset. Okay, fine, fine, fine. Either deduct it from the value of asset or set up as a deferred income. I didn't understand. You can pass the entry bank to deferred government grant. Bank to deferred government grant or simply bank to government grant. So it can be bank to asset, that is deducting from the cost of asset, or bank to grant. This is optional. Entity can choose which one to be followed, whether to follow this one or whether to follow this one is at the option of the entity. Okay, okay. So for whether depreciable, non-depreciable, I have these two options. Then where is the difference? Then where is the difference? If deferred income, there is bank to grant entry you passed. Correct. If deferred income related to depreciable asset, then amortized to statement of P&L in the ratio of depreciation. Amortized to statement of P&L in the ratio of depreciation. Amortized to statement of P&L in the ratio of depreciation. But if it is non-depreciable asset, amortized to statement of P&L in the ratio of, because there is no depreciation, cost of satisfying conditions. If it is a conditional grant, there are some conditions attached to it. So what is the cost of satisfying conditions in the ratio of cost of satisfying conditions? It will be amortized to P&L if it is non-depreciable. Depreciable in the ratio of depreciation. Okay, understood. Now, monetary grant. Monetary grant related to income. So the question is the grant related to asset? Acquisition and construction of asset? No, the grant is not related to acquisition and construction of asset. Then the grant will be categorized as income related grant. That is to for meeting some expenses or to run the business, government has given you some grant. The only treatment is deferred income. So deferred income means I know the journal entry bank to grant. Then what do you think? It should be amortized to statement of P&L over the period for which the grant is received in the ratio of cost of satisfying conditions, because there is no depreciation pattern is not relevant here. So in the ratio of satisfying conditions, that is what same. Whether if the grant is received for non-depreciable asset or related to income, deferred income is the treatment, then subsequently amortized to P&L in the ratio of cost of satisfying conditions. In the ratio of cost of satisfying conditions. Okay, okay, fine, fine, fine. Understood. Now, so accounting of monetary, non-monetary grants, of which monetary, asset related, income related, now non-monetary grant in the form of a land, or grant is received in the form of a plant and machinery or a license or a computer, then what should be the accounting? Recognize either at nominal value. What is the meaning of this nominal value here? What is this nominal value? So nominal value, if you had incurred some cost, some basic cost, if the value of the land is 10 lakhs, but you incurred, say for example, 5,000 rupees. some basic expenses you incurred, then land will be recorded at that 5,000. But you have not incurred any cost. There can be a scenario you incurred a cost, a basic amount you incurred, then that basic amount will be the nominal value. Or you have not incurred any cost. You have not incurred any cost, not even 1 rupee. Then nominal value could be that 1 rupees or 10 rupee or 100 rupees. You may record the asset at this nominal value. Basic amounts you can record the asset. Okay, fine. Then, or if the asset value is 10 lakhs, as I already said, you don't want to record it at nominal value. Then the asset can be recorded at fair value. The journal entry will be land to government grant. Oh, now you set up a government grant account. Yes, yes. So once more, if it is nominal value, you incurred 5,000, then land to bank. So there is no further, there is no question of government grant accounting, land to bank. Or we'll pass the entry land to grant, maybe at 10 rupees. Then also the amount is too immaterial, so further subsequent accounting question will not arise. Then if you record it at fair value, land 10 lakhs to grant 10 lakhs, instead of 10 rupees, you are recording it at 10 lakhs. Then how this grant of 10 lakhs will be subsequently accounted? I hope you have an answer. If it is depreciable asset, that grant will be amortized in the ratio of depreciation. If it is non-depreciable asset, grant will be amortized to P&L in the ratio of cost of satisfying conditions. Okay. Yes. So that takes care of accounting. So basically we have only two types of accounting. For income related grant or non-depreciable or depreciable, if option is selected, bank to deferred income, deferred grant, which will be amortized to P&L in the ratio of depreciation if depreciable asset. If it is income or non-depreciable asset, in the ratio of cost of satisfying conditions. Then for asset related, there is an option of adjusting the grant against cost of asset. That's it. Now refund. What is the treatment if the grant is refunded, if there is refund of government grant? So if you have not satisfied conditions, only a refund of government grant scenario arises. You have not satisfied the conditions. How will you account for the refund of government grant? If asset related grants, and asset related grants, you have adjusted it against the cost of asset, then reverse the entry. When you received the grant, you passed cash to asset. Reverse the entry, asset to cash, asset to cash. That is asset to grant. Then I may have to pass grant to cash. Instead, I am passing a single entry, asset to cash. But if there is accumulated depreciation on it, P and L to asset, that entry also. That let's see the question now and find out what is the accounting. Time being, reverse. If the grant has been if the grant is received 2 years ago, if the grant is received 2 years ago, then 100 rupees asset, 20 rupees grant received, you have depreciated only 80. After 2 years, you add 20 to the value of asset when it was refunded, right? So on 20, you need to charge depreciation for 2 years. So P and L to asset. Accumulated depreciation, which you do immediately. Which you need to do immediately. Depreciation entry has to be passed. Okay, fine. So 1 plus 2 is compulsory. Understood. Now, in all other cases, if it is deferred income, government grant debit, if not amortized. If it is still remaining, government grant account is remaining as a credit balance, debit, government grant account debit. If already amortized, debit P&L to bank. Government grant account debit, P&L account debit to bank. Reverse. Okay, fine, fine, fine. Special cases. Special cases. You need to study the special cases. Very important. Unconditional grant. If the entity has received any unconditional grant, that unconditional grant should be immediately transferred to statement of P&L. Unconditional grant is always immediately transferred to statement of P&L. Okay, fine. If unconditional grant, no doubt whether asset related or income related, whatever, it is immediately credited to non-monetary terms, no conditions attached, then no doubt it is income approach. IND AS 20 is following income approach where the credit will be to statement of P&L. Okay. Now, grant for immediate financial support or to cover past operating losses. So, no more further conditions to satisfy. Immediately transfer to statement of P&L. Okay. Now, forgivable loans. What? Forgivable loans. Say I have taken a loan of 20 lakhs, which means on the balance sheet liability side, a loan was appearing, financial liability loan was appearing at 200 lakhs, 2 crores. But now the government has announced that this loan is not repayable. Government has announced the loan is not repayable. The loan you need not repay. That is what forgivable loans. Then what is the treatment? This loan will be converted to grant. Of course, then it is a government assistance we have received. Loan will be converted to grant. Then what is the treatment of this grant? Now conditional or unconditional, over the condition period, in the ratio of satisfying conditions, it will be amortized to P&L. Okay. Now, what if you have received loan at concessional interest rate? Market rate of interest is 15% and you have received this loan at 5%. Government has given loan at 5%. Now, as per IND AS 109, the loan should be initially recorded at fair value. What is fair value? Present value of future cash flows, discounted cash outflows, discounted at market rate, that is 15%. So you have studied the concept. If you discount it at a higher rate, higher the discounting rate, lower the present value. That is, if you have taken 10 lakhs loan, actual interest rate is 5%. Market interest rate is 15%. Then outflows will be discounted at 15%. So your fair value will be a much lower value than this 10 lakhs. 10 lakhs, much lower value than the 10 lakhs. Therefore, transaction price minus fair value. Say for example, 7 lakhs is the fair value. The difference 3 lakhs will be treated as government grant. So you will pass the entry bank account debit. You got a loan of 10 lakhs of which loan financial liability will be only 7 lakhs. Grant will be recorded at 3 lakhs. The loan will be amortized as per IND AS 109 and the grant will be subsequently accounted as per IND AS 20. So if there is no condition, immediately to P&L. If there is condition, in the ratio of satisfying conditions, it will be amortized to statement of P&L. Okay, easy. Now presentation. You received a grant to P&L, to P&L, to P&L. In P&L, which head? If you are showing it as income, it will come under other income. Or if the grant is specifically to meet any expense, it can also be deducted from that related expense. It can also be deducted from that related expense. Both are correct. Either show it as income or deduct from expense. The effect is also same. Okay. In the balance sheet, you pass the entry bank to government grant, say 10 lakhs. Grant is for 5 years. Cost is also for equal cost will be incurred. So you'll pass grant to P&L 2 lakhs. Government grant to P&L 2 lakhs. Yes. Then the balance, credit balance of government grant is 8 lakhs. Where will you show this 8? So that 8 lakhs, out of that balance 8 lakhs, of that balance 8 lakhs, which will be amortized in the next 12 months, 2 lakhs will be shown under other current liability. So 2, the which will be amortized in next 12 months will be shown as other current liability, which will be amortized for the more than 12 months, 6 lakhs will be shown as non-current liability, will be shown under non-current liability. So in the cash flow statement, we show if it is other than asset related under financing activity, and if it is an asset related grant, we'll show it as investing activity. If it is an asset related grant, we show it as investing activity. Grant received will be investing inflow, and other than asset related, it will be shown as financing activity. That takes care of the presentation part of IND AS 20. So let's quickly move on to the questions. Government gives a grant of 10 lakhs for past research of H1N1 vaccine to a pharmaceuticals limited. Examine how this government grant be recognized in the books of A Pharmaceuticals Limited. Immediately credited to statement of P&L. Correct. Government gives a grant of 10 lakhs. Same question, but there are some conditions. Even though similar vaccines are available but expensive, the entity has to ensure by developing a manufacturing process over a period of 2 years, and the cost should reduce by 40%. Some conditions are attached to this. Then it should be it should be set up as deferred income and charged to P&L over 2 years in the cost of satisfying conditions. Okay. A village of artisans in a district got devastated because of an earthquake. A Limited was operating in that industry and was providing employment to the artisans. Government gave a grant of 10 lakhs to A Limited so that 100 artisans can be rehabilitated over a period of 3 years. Government releases 2 lakhs. Okay, understood. So, government releases 2 lakhs, which means I received only 2 lakhs now, but I can record a receivable of 8 lakhs to grant 10 lakhs, and it should be amortized to statement of P&L over 3 years. Grant to P&L, grant to P&L, grant to P&L over 3 years in the ratio of cost of satisfying conditions. So what is given? A Limited will recognize a grant of 10 lakhs and set up as deferred income and will recognize in P&L over the period as per the principles of IND AS 20. Okay, fine, understood. Forgivable loan at less than market rate. A Limited received from the government a loan of 50 lakhs at 5% payable after 5 years in a bullet payment. The prevailing market rate of interest is 12%. So actual rate of interest is only 5, but market rate of interest is 12%. Interest is payable regularly at the end of each year. Calculate the amount of government grant and pass journal entry. Also examine how government grant can be recognized. So how government grant will be recognized? I'll find out. 50 lakhs into 5%. So every year you need to give 2,50,000. and last year 50 lakhs. So year 1 to year 5 and year 5. So year 1 to year 5, I will discount it using which rate? 12%. 1 divided by 1.12, 1, 2, 3, 4, 5. This is 0.5674 and this is 3.6047. I'm taking up to 4 decimals. So 2,50,000 into 3.6047 and 50 lakhs into 0.5674. So 37 lakh 38,175. So I'll record 37 lakh 38,328. Some differences are there. So bank account debit. You received 50 lakhs. To loan you will record this 37 lakh 38,000 something. The balance will be recorded as government grant. 12 lakh 61,000 something. Now, what is the treatment of loan? Loan will be amortized. You know, you have studied financial instruments, opening balance, interest unwinded at 12%, repayment, closing balance, and accordingly the loan will be closed. And A Limited will recognize this grant if there is no conditions attached to it, it will be recognized immediately in P&L. If there are conditions attached to it, then whether it is asset related, income related, accordingly it will be accounted. Okay. So here what is given? 12,61,672 will be recognized in P&L systematic basis over the period in which A Limited recognized as expense with the cost of satisfying the condition. Okay. Continuing with the facts given in illustration 4. State how the grant will be recognized in statement of P&L assuming the loan is an immediate relief measure to rescue the enterprise. Immediately credited to statement of P&L. The loan is a subsidy for staff training expenses incurred equally over a period of 4 years. Then it will be amortized to P&L in the ratio of cost of satisfying conditions. Amortized to P&L over 4 years in the ratio of cost of satisfying conditions. It can either be shown as other income or deducted from the staff training expenses incurred. Okay. If the loan is to finance a depreciable asset, then amortize in the ratio of depreciation. Deducted from the cost of asset or amortize in the ratio of depreciation. Okay. A Limited wants to establish a manufacturing unit in a backward area and require 5 acres of land. The government provides the land on a leasehold basis at a nominal value of 10,000 per acre. The fair value of land is 1 lakh per acre. So 5 acres of land, 1 lakh per acre means 5 lakhs. This is the fair value of the land, but you paid 50,000. Then how the government grant will be recognized? You have two options. Either you may pass the entry, the nominal value 50,000 which is the cost incurred by you. So you may pass the entry land to bank 50,000. Land to bank 50,000 where there will be no further accounting. No further accounting of grant. Grant related accounting will not be there. Or you may pass the entry land account at fair value of which to bank you paid 50,000, to grant 4,50,000. Okay, then what will be the accounting of this grant? Subsequently, grant should be amortized to P&L, statement of P&L in the ratio of being it as a non-depreciable asset. The grant has to be amortized to P&L in the ratio of cost of satisfying the conditions attached. Okay. Now what? All these are very basic questions. A Limited establishes solar panels to supply solar electricity to its manufacturing plant. Cost of solar plant is 1 crore with useful life of 10 years. Depreciation is on straight line basis. Okay. Government gives 50 lakhs as a subsidy. So you're buying solar panels to supply solar electricity to its manufacturing plant. So solar panels being a depreciable asset, and you received 50 lakhs as the government grant, you either adjust it against the cost of solar panels and only the balance will be depreciated, or you can set up a deferred income and amortize equally to P&L over 10 years. Okay. How the same will be disclosed? If it is asset related, it will be shown under investing activities. Other than asset related, you would be showing under financing activities. Presentation. Okay, fine. This is something which we have discussed. 9. A Limited received a government grant of 10 lakhs for environmental protection. Expected environmental cost is 3 lakhs per annum. Determine the presentation of such grant related to income. You got 10 lakhs. Environmental protection is expected to be 3 lakhs per annum for next 5 years. So over next 5 years, if the cost is same, for 5 years, 3 lakhs you may show as expense and 2 lakhs as other income, or you can show net 1 lakh as expense. You may show it as other income or as a reduction from the expenses. Okay. Refund. Refund. This question appears to be a big one, but the answer is very simple. Let me quickly read illustration number 10. A Limited has received a government grant of how much? 10 crores in the year 11-12 from local government. Okay, some conditions are there to satisfy for 2 years. A Limited has accounted the grant as income in the year 11-12. While accounting for grant in the year 11-12, A Limited was reasonably assured that all the conditions will be complied with. Okay. However, in 2015-16, it was found that A Limited has not complied with the above condition and therefore notice of refund of grant has been served to it. So you got a 10 crore grant in 11-12 and the condition period is 2 years. So you would have fully recognized the grant in this 2 years, right? 11-12 you have satisfied. 12-13 also you would have, I mean half 50% grant would have satisfied. Your first entry was bank account debit 10 crore to government grant 10 crore, and then government grant to P&L. First year you would have recognized 5 crores. Second year also you would have recognized 5 crores. However, in 15-16, which means after 13-14, 14-15, 2 years, 15-16, they have identified the conditions are not satisfied and the grant is to be refunded. A Limited has contested but lost in court in 15-16 and now the grant is fully repayable. The accounting done in previous years was not incorrect as was not an error. It was not an error. That years we recognized expense, but now it is to because the refund came only now. So what is the accounting? So what is the accounting P&L to bank? It is already amortized, right? Yes or no? Already amortized. So you should pass the entry P&L to bank. Repayment of grant related to income shall be first applied to unamortized credit. No unamortized credit exists. There is no credit, so it should be immediately recognized in P&L. So your entry will be P&L repayment of government grant, P&L to grant payable to bank. That's it. Test your knowledge questions. Question number 1. This question has been tested for 2 times. ABC Limited has received the following grants from Government of Delhi for its newly started pharmaceutical business. 20 lakhs received for immediate startup without condition. Immediately credited to P&L. 50 lakhs received for research and development of drugs required for the treatment of cardiovascular diseases with following conditions. So if there is conditions, it should be recognized in P&L over the period in which the cost of satisfying the conditions, over the period in which in the ratio of cost of satisfying conditions. So 50 lakh should be amortized to P&L over the period which is mentioned in the ratio of cost of satisfying conditions. 2 acres of land, fair value 10 lakhs received. So it can either be recognized at nominal value or fair value, which is at the option of the entity. 2 lakhs received for purchase of machinery of 10 lakhs. Useful life of machinery is 5 years. Depreciation is charged on straight line basis. Then 2 lakhs can either be deducted from the cost of asset or setting up as a if it is adjusted against the cost of asset, then only 8 lakhs will be depreciated, or 10 lakhs will be shown on the asset side. That 2 lakhs which is received as grant will be amortized to statement of P&L in the ratio of depreciation. Okay. Now, this question number 2 I am not taking. This is very similar to that of, or it is the same question. We got a loan, market rate is 12%, actual rate is 5%. So what is the accounting entry if the grant is received for a depreciable asset? Okay. Now, MNC Limited has received grant in the nature of exemption of customs duty of on capital goods, exemption of customs duty on capital goods with certain conditions related to export of goods under EPCG scheme of Government of India. Okay. State whether the same is a government grant under IND AS 20, government grant and disclosure of government assistance. Now the question is, uh, what will be the accounting if it is an asset related grant? If it is an asset related grant, it will be either deducted from the cost of asset or amortized it to P&L in the ratio of depreciation. If it is grant related to income, amortized to P&L in the ratio of cost of satisfying conditions. That's it. Okay. Now, ABC Limited is a government company and it is a first time adopter of IND AS. As per the previous gap, contributions received by ABC from the government, which holds 100% shareholding in ABC, which is in the nature of promoters' contribution, have been recognized in capital reserve. See, the question is, as per AS 12, promoters' contribution can be credited to capital reserve. But there is nothing called promoters' contribution we have studied. No, nothing to capital reserve. Here we are following income approach. Every grant will be transferred to statement of P&L. State whether the accounting treatment of grant in the nature of promoters' contribution as per AS 12 is permitted under IND AS 20. See, we have studied IND AS 20, that is not permitted. You can read the answer. So you should say as per AS 12 there was income approach and capital approach. However, as per IND AS 20 only income approach, whatever grant received will be transferred to P&L. So old approach is not permitted in IND AS 20. Such a provision of crediting to capital reserve is not there in IND AS 20. So here what you should write if you receive a promoter's contribution: conditional, unconditional. If it is unconditional, it can be immediately credited to P&L. Conditional, not related to asset, then it will be credited to P&L in the ratio of cost of satisfying conditions. That's it. Then question number 5. So this appears to be a big question, also an exam question, but it is very easy. Rainbow Limited carries out various projects for which it has received either received government financial assistance or in the process of receiving the same. The company has received 2 grants of 1 lakh each relating to the following ongoing research and development projects. Okay, you got already 2 grants of 1 lakh each. Fine. The first grant relates to the Clean River project, which involves research into the effect of various chemical waste from the industrial area in Madhya Pradesh. However, no major steps have been completed by Rainbow to commence this research as at 31st March 2012. You got a government grant for a cleaning project and you have not started any major steps. So what will be the accounting? Here you should write there is no conditions. For the first one, no information regarding the conditions are given. If there is no conditions, it can be immediately credited to statement of P&L. If it is conditional grant, it will be amortized to P&L in the period in which the conditions are to be satisfied in the ratio of cost of satisfying conditions, because this is not related to asset. Okay. The second grant relates to a commercial development of a new equipment that can be used to manufacture. So second grant is related to commercial development of a new equipment. So it is an asset related grant. Rainbow Limited is confident about the technical feasibility and financial viability of this new technology, which will be available for sale in the market by April 2013. It's an asset related grant, so you can create it as a deferred income and deferred income bank to grant, but there is no depreciation. So wait, only in the pattern of depreciation it will be amortized. So first year, when upon receipt you will pass bank to grant. The asset will be ready after 1 year. Then after 1 year only you will pass grant to P&L, grant to P&L, grant to P&L. Okay. Now, if the or if you are going for the second alternative, that is deducting from the cost of asset, now you record it as bank to grant. And once the asset is ready on in April, then you make the adjustment grant to asset. Okay. In September, due to floods near one of its factories, the entire production was lost and Rainbow Limited had to shut down the factory for a period of 3 months. Okay. The state government announced a compensation package for all manufacturing entities affected due to floods. So in September, there was a flood. The entire production was lost and Rainbow Limited had to shut down the factory for a period of 3 months. The state government announced a compensation package for all manufacturing entities affected due to floods. As per the scheme, Rainbow Limited is entitled to a compensation based on the average of previous 3 months sales figure prior to the floods, for which the company is required to submit an application on or before 30th June 2012. So there was a flood in September 2011 or 2021. Let's take 2021, where for getting the package compensation package, you need to file an application form on or before 30th June 2022. Financial statements of Rainbow Limited for the year ended are adopted on 31st May, by which date the claim form would not have been filed with the government. Suggest the accounting treatment. Okay, so you are closing the financials on or before approval date is 31st May. So can you recognize the government grant on 31st March 2012 financials? Because you are closing 31st March 2012 financials. It is adopted on 31st May, but you have time till 30th June and you have not filed it yet. So can you recognize this government grant for the year 31st March 2012? 11, 12, can you recognize grant income? Of course not, because you have not even filed the application. So you cannot recognize. In the next year, you can recognize it as income. Current year, you cannot recognize it as income because you have not even filed the application form with the government. You have not submitted, so you should not recognize it as income. Now, an entity opens a new factory and receives a government grant of 15,000 in respect of capital equipment costing 1 lakh. It depreciates all plant and machinery at 20% per annum. Show statement of P&L and balance sheet extracts in respect of grant for the first year. So you got a government grant of 15,000. So you can pass the entry bank to government grant 15,000. Okay. Now you bought a machine of 1 lakh. So it is a PPE to bank. You paid 1 lakh. Now the question is, what is the accounting under both the methods? What are both the methods? If the asset is adjusted, so next entry is grant 15,000 to asset or PP 15,000. Following the first method, asset will be appearing in the balance sheet at 85,000 and depreciation 85,000 into, so first year depreciation is 85,000 into 20%, that is P&L extract. Balance sheet extract 85,000 minus 17,000, balance sheet extract. Okay. Now if you're going for the second method, asset will appear in the balance sheet at 1 lakh into 20% depreciated. So depreciation 20,000 deducted. Asset will be appearing at 80,000 on the asset side. Then you received a grant of 15,000, of which first in the ratio of depreciation, right? So 20%, 20% over 5 years equally you could have done. Anyway, 20%, 20%, 20%. So please listen. First 20% which we are writing off will be taken to P&L, other income. Next 20% which we are writing off in the next year will be shown under other current liability. And the next, so this is 3,000 P&L, 3,000 other current liability, and 9,000 will be in the other non-current liability. So you may see this. When grant is treated as deferred income, depreciation will be 20,000 and income will be 3,000. So net effect under both the methods are same, right? Other non-current assets 80,000, non-current liability 9,000 and 3,000. A company receives, next question number 7. Company receives a cash grant of 30,000. The grant is towards cost of training young apprentices. The training program is expected to last for 18 months. The actual cost of training is 50,000 and 25,000. How this grant will be accounted? Easy. So company received a cash grant. So cash to government grant 30,000. Okay. So this is received on 31st March 2011. So it is received on 31st March 2011. So in 18 months, 50,000 is to 25,000. In that ratio, it will be amortized to statement of P&L. So how this grant will be accounted for? So let's quickly do the, discuss the answer. 31st March 11. 31st March 11. We know that this grant received 30,000 will be amortized in the ratio of 50 is to 25. So current liability is 20,000 and the non-current liability is 10,000. 31st March 2011, upon receipt, next year you will recognize 20,000 as income and the second year you will recognize 10,000 as income. So it will be shown as current liabilities and this is non-current liabilities. And the next year 20,000 already recognized as income. So 10,000 will be other current liabilities. Fine. In statement of P&L, other income, expense. Other income, expense. Easy. Or you may adjust it against the training expense. Net expense you could have shown 30,000 and 15,000 as the case may be. Easy set. Now question number 8. Entity A is awarded a government grant of 60,000 receivable over 3 years, 40, 10 and 10, contingent on creating 10 new jobs and maintaining them for 3 years. The employees are recruited at a total cost of 30,000 and the wage bill is 1 lakh, rising by 10,000 in each subsequent years. Here what they are telling, we got a government grant of 60,000, of which 40 only received in the first year and 10,000 in second year and third year. So you will pass the entry bank account debit, 40,000, receivable 20,000 to government grant 60,000. And in the ratio of total cost 30,000 is the expense, 1 lakh is the wage bill. Second year there is no recruitment expense but 1 lakh 10,000. Third year 1 lakh 20,000. This is the expenses you are incurring, 1 lakh 30,000, 1 lakh 10,000 and 1 lakh 20,000. Calculate the grant income and deferred income to be accounted in year 1, year 2, year 3 under two following situations. There is reasonable assurance that the entity will comply with the conditions and the grant will be received, which means as usual. But there is no reasonable assurance that the grant will be received. Let's find out. In the first case, if there is reasonable assurance that the entity will comply with the conditions attached. So what we should do is, as my first entry already done, bank account debit 40,000, receivable debit 20,000 to government grant 60,000, and this will be amortized to P&L in the ratio of 1 lakh 30,000, 1 lakh 10,000 and 1 lakh 20,000. 60,000 into 130 by total 360. 2 lakh 16, 667. 18, 333, 20. This is how the income will be recognized. So 60 minus 21, 667. 38, 333. Second year, this is the closing balance. Third year, nil. So there is a second scenario to this, when reasonable assurance is not there. So if there is no reasonable assurance, we will recognize what is received. Bank. Here I think you can pass bank to government grant 40,000. But I have received only 40, but here what I have not understood is they amortize to P&L in the same way. 60,000 itself they have amortized. So anyway, 40,000 is only you received as income, but you amortize to P&L 60,000 into 130 out of 360. So you have amortized. So bank to deferred income to P&L 21,667 itself. So balance 18,333. Okay. Year 2 you have again received bank to grant or income 10,000. So your total income balance 18,333 plus 10,000, you have a total balance of 28,333. And income to P&L, you have recognized only again 60,000 into 110 by 360. 18,333. Next year. So your total balance 18,333 is recognized as income. So balance 10,000 is there. So last year again you received 10,000. So total 20,000 is there. So income to P&L, that full 20,000. So closing balance is nil. If there is no reasonable assurance, so what we are understanding is recognize bank to deferred income only the amount you have received, but amortize to P&L based on the total grant receivable in the ratio of cost of satisfying conditions. So that takes care of all the questions from the study material. So that's it guys, all the best. I hope this is clear. So if there is a doubt, you can post it in the comment box below. Thank you.